Hey guys, Dave Santarelli here from the Santarelli Exchange. Just wanted to go over a quick market recap with you guys. First, I wanted to go over yesterday we made a trade on QQQ. We got some calls yesterday and I gave a specific stop loss. We made the trade the last half hour of the day and I said our stop loss was going to be if today we drop below the previous day's low. And so as soon as we seen that happen today, we exited the trade and we had a small 47% loss on Qs. Now here's the thing. We bought the 177.50 strike calls on Qs for next week's expo, and it did not follow one of the chart patterns. It was a catalyst trade. It was one of them that, since big tech is reporting Q3 earnings next week, it was a trade that we got for earnings next week. So it was a catalyst trade driven by earnings, and we got into that. And even though personally I feel that that trade would still do fine for next week, it's important to, as a trader, to be disciplined enough to follow your trade plan and know when to take your loss. And at TSE, we have a detailed trade plan, for certain types of trades. And yesterday I told members that our stop on this trade was going to be a close or a move below yesterday's low. And as soon as that happened this morning, before the big drop happened, we took around a 47% loss on the Qs. Now, Costco, you guys have seen the hook pattern on Costco. That reached our target this morning and well above it. That trade was up over 80% this morning. The stock is up 9 cents on the day now. It's at 228.58. It was up to almost 231. 229 to 233 is our target price range, profit area for Costco. So that trade did exceptionally well. PayPal just had earnings after the bell today, and PayPal had a nice 4% pop. So going back to the Qs, I do still feel, and in the trade room today, I told members that I wanted them to keep an eye on the Qs, because even though we sold it for a loss today of 47%, I want to go over next week how that went, compared to the drop we had today and compared to if we rally next week. Because this is what I want to show you guys. Here's a picture, here's a chart of the Qs, and this is what's important about this. And a lot of new traders get worried when you see big swings in the market like we're seeing today, but you have to understand that the implied volatility is higher right now. So you're going to see those larger candles, you're going to see those larger moves than you did back, when we had the breakout momentum phase back in May and June of this year and further on. These large candles, you're seeing those because the implied volatility is higher. So it's going to be normal to see large swings like this. Now, this is what I want to specifically show you guys on the Qs. Here's a couple things that may happen, and this is what we have to watch for, and we're going to be watching out for. First off, this pink line right here, this is the 200-day SMA. Okay, we've been holding well, and if we zoomed all the way back out of that, you would see that it's been a long time, a few years since the Qs dropped below the 200-day simple moving average. So we did drop there below that 1 day, and we quickly had a candle well above that the next day. So that's something we're going to be watching for. If we see tech start to break down, especially with earnings season next week, if we see tech miss earnings and the Qs drop below that 200-day SMA, that's going to be a sign that the markets have a larger drop coming down the road. So that's going to be one thing we watch. Now here's the second thing though, and this is why we bought the Qs in the first place, as a kind of like a piggyback trade on earnings for next week. So this is what we see. As you guys can see, when you have the breakout momentum phase right here, when you're bouncing off the 50-day SMA, climbing higher, then you come back down to the 50-day, you're climbing higher. Same thing is happening now. This is what I'm thinking. So we dropped down to the 200-day SMA, and as you guys can see here, from each time it drew back, it drew back to the 50-day SMA, and then it had its climb. We've seen that when it dropped back down to the 50-day last time, it's somewhere in the middle of that previous drop. So you see here, here's the base of that drop, and then here's the base of this drop. And if you go across, you could see that this drop was right when the previous drop started. And this is kind of what we're seeing right now. So a confirmation for a pattern, we need to see a continuous pattern. So right now, after we just dropped through these major SMAs, we have no pattern to follow yet on the Qs. So this is why it's important that we watch and see if we do drop below the 200-day SMA, then I think we're going to continue to drop further. And if not, then what we're going to do is we're going to see like a breakout momentum type, and we're going to keep climbing, dropping down to maybe the 200 or 10-day SMA, and then we'll keep climbing. So that's one of the two outcomes that we're going to see, and it's all driven by the markets and the events that we're going to see, the catalyst from tech earnings next week. So that's the Qs, and that was our losing trade for this week. Now let's go over, in the trade room today, someone asked if this is the same type of market that we seen in 2008. They said, Dave, is this drop that we're seeing today, is it the same as the drop in 2008? And that was a great question. I wanted to go over this. So here's another chart I have pulled up in the Dow. This is the Diamond ETF DIA. This is 2008 before and after the market drop. And I wanted to share with you guys the key points of what you're looking for as far as a market meltdown and a big correction coming. So first off, you're seeing, just like we've seen on the Qs in the previous chart here, how it got down to that 200-day SMA, but it's holding right now. I'm saying that's important because if we drop below that, this is what we're looking at. So if we're looking at a major market correction, you could see once the DIA closed below the pink line, that's the 200-day SMA, it was a breakdown momentum. Just like we have breakout momentum, this is considered a breakdown momentum, because what we're seeing here is a close below the 200-day SMA, that's the pink line right here. And the chart, we did not see a reversal until we moved above the 200-day. So more specifically, what are we looking for? So furthermore, we look for when the 50-day SMA, that's this red line right here, crosses below the pink 200-day SMA. And that's our sign that we are going to enter into some puts and that a larger correction is coming, a larger move lower. And that's really clear on here, as you can see, and just the opposite. So if you bought some puts right here, once you got that signal, you made a ton of money from 140 all the way down to below 60 it dropped. And this is on the Diamond ETF back in 2008. And then the reversal was the same. So that's when you shorted, when you cover on a longer term trade like that. So that's from 2008 until a little bit after 2009. So that's like a year and almost a year and a half, a year and a quarter trade there. And that's a year and a quarter, a year and 3 months that the markets did nothing but drop. And that's what you could see right there. So, like I said, if you were in a put there or if you shorted the market, what you're looking for to cover it is when the red 50-day SMA crosses above the 200-day SMA, and the stock, the shares, the candles are also trading above those SMAs. So that's your entry, that's your exit on something like that. So that's in 2008. Now let's take a look at how the Diamond ETF looks now. So here's the Diamond ETF now, and this is why I was telling members not to worry yet, because as you can see, right now, we're still holding above that 200-day SMA. The 50-day SMA is still pretty high up there, so we're not going to get any major market correction signal yet, as far as like I showed you before. But for right now, we're watching that 200-day SMA. That's extremely important. Something else I said in the trade room today was a lot of the algos, the algorithms that you know that are trading the market, they get specific. How they work is someone makes a system and they plug in, once a stock drops to the 200-day SMA, if it has a PE ratio of X amount, if it has if it has a market cap above a certain amount, then the algos will target that stock and buy that. So that's why it's important to watch that 200-day, because if we don't see any buying there, then that's going to worry me for a further decline. But as of right now, we're holding those areas, and it's just implied volatility that you're seeing in this market. And that's why we're seeing large swings. We're seeing swings that were up 400 points and then swings were down 300 points. It's the way the market is right now at this time with implied volatility. So next off, we went over what are the best sectors to trade when the market's bad or when you're going into a bearish market. What are the sectors that you want to watch for? What are the safe havens? All right, and safe havens are going to be your pharmaceuticals, your consumer staple stocks. And so today I went over Pfizer, Merck, Abbott Labs, Johnson & Johnson, and I showed how even in an environment right now, like we're seeing with the implied volatility higher, these big market swings, the market dropping, these core stocks here in these sectors, let's take a look at Abbott. I'm sorry these look so bad because I just drew them up quick with a pen. But let's take a look at this. So here is Abbott. You know, as you can see, this has been a breakout momentum stock. You know, just like we have three main chart patterns that we trade at TSE. We have hook patterns, breakout momentum, and channel range bound. And as you can see for Abbott, the whole year this year, basically, it's been climbing above the 10, 20-day SMA, and then it pulls back down to the 50-day SMA on the major retracements before it has that next leg or climb higher. So it's coming down to that 50-day SMA, that red line right here, and then it's bouncing, going higher, and then it's taken, like I said in the other chart, it's about halfway from the base when it started to drop in the previous wave. And that's where the base of that next wave is. And then that's why it looks like a step stairs. You know, it looks like those stairs. It's because it's dropping halfway down about, and then it has that next wave or climb higher, that next drop to the base of that previous wave, and then it has that next climb higher. So as you can see there, every time it's come down to the 50-day SMA, it's been a great buying signal. Abbott Labs, I mean, that's near the highs of all time, basically here, just a few percentage points away from that. So this is a stock in a sector for volatile markets or for a bearish market. So your pharmaceuticals, your drug companies, you know, your healthcare, consumer staples like Walmart, Target, those are also good ones. So now let's take a look. That was Abbott. Let's take a look at Johnson & Johnson, and this is a stock that we were trading. Johnson & Johnson has made us money in the past. The last trade did not work out. That was last week's expo because we had that big 800-point drop. And I wanted to go over this chart because this is why I wanted to tell you guys that it's important to give your trades enough time. If we just gave ourselves 1 week extra time on that Johnson & Johnson trade, that was our only losing trade last week. If we had just one more time, one more week as an expo date, this trade would have been fine. It would have been a great trade. Would have been a large profitable trade. As you see here, we had those 2 or 3 large candles lower, the red candles, and then it took time to climb back and retrace back to where it was before the drop. So that takes time. So that's why I always say time is on your side. If you're looking at something and it's only a few cents more, which is a few dollars with options, and it's an extra week or two, do it. Time is always on your side, especially if you have regular calls or puts. You can sell your calls or puts at any time, lock in your gains, and you're not restricted with a short time frame or a short-term expo, like a weekly expo. So this is the type of market. If you're day trading, that's fine. Day traders can make a lot of money in these swings. This implied volatility, these large swings, that's a day trader's best friend. But as far as investing goes, like in our chart patterns here, it's better to give ourselves enough time because if the market has an 800-point drop, you're going to need a few days for that stock to get back up to those levels it was at before the drop there. So just like Johnson & Johnson here, you could see here how you had the consolidation phases and then the breakout phases, the consolidation breakouts, and then it came down to that 200 almost, and it bounced higher, and it's on the climb here. It's around 140 a share. That's a good stock to buy in a tough market. It just had earnings too. It's doing really well. Now let's take a look at Merck. Here's another one, just like Abbott Labs I went over. You know, this stock too is the same thing. And guys, this is something you have to get familiar with. Once you look at one stock in a sector, chances are the other stocks in that sector is going to look exactly the same. Just like Abbott, just like Merck here. you're seeing the stock come down to that 50-day SMA and then have that next wave or climb higher. Comes down to that 50-day SMA and then has the climb higher. Merck here, it just bounced off that 50-day SMA and it's on its next wave higher here. We have 3 large green candles and that's considered a breakout momentum, and it's going to continue to climb here, especially if we have volatile markets. These are your safe haven stocks. Let's take a look at Pfizer now. Pfizer, same thing, guys. This one, it's even been a little bit stronger. As you've seen, the other stocks, they've been coming down to the 50-day SMA. Here on Pfizer, it's only been coming down to the 20-day SMA and then bouncing. Now, in this big decline in the markets we just had this past week, it actually came down to the 50-day SMA, and it's bouncing from there, and it's much higher after that bounce there. So, again, a breakout momentum, good stock for a volatile market, a bearish market. Your Pfizer, your Merck, your Johnson & Johnson, your Abbott's, and like I said here, Q's. What we're looking for, again, is that 200-day SMA. That's really important, guys. If we see a green candle now, chances are we're going to break that resistance from the previous run here, and if we do, then that's confirmation that we have a pattern here, and we could trade that pattern. Now, let me go over the next thing with you guys. All right, guys, so tomorrow is monthly expo. It's the third Friday of every month. Tomorrow is normal monthly expo. I told members to expect the Dow between 25,000 and 25,500. We're at 25,379 right now. We have some nice support at 25,000 and some resistance around 25,500. So I expect the Dow to be within that range tomorrow. If it breaks above or below those levels, then you know, it's a sign for what's to come next week, and I'll be looking at that. If we break down below that, that's going to worry me, and we'll probably start investing into some more of these safe haven stocks I just went over. So I don't think that's going to happen though tomorrow, but I wanted to let you guys know what to watch for, because it's important to know what you have to watch for and what the you know, what the alternatives can be and what can happen, so you're prepared for whatever does happen. So like I said, Q's came down to the 200-day SMA, bounced there. We'll see if we get a bounce tomorrow. PayPal just had earnings, stocks up 4%. On CNBC here, it's showing up 7%. So maybe that's for the day, or after hours, it's up 7%. For the day, it's only up 4%, but it is up 7% since the closing price. So that's great. That's a great sign for tech next week. Also, guys, tomorrow, since it's going to be monthly expo, since we have this increase in implied volatility, tomorrow is going to be a prime day on expo day for day trading. So we will look for some day trade setups. Tonight, before I go to bed, I'm going to set up my screens here. I have different setups for different types of ways I trade. So I'm going to set up my screens for day trading. I'll have the 4 over here, 4, 8, 12. I'll probably have around 16 charts up for tomorrow morning, and I'll have them set for the 15-minute opening range breakout strategy that we use to day trade. And you could look at that strategy on our YouTube channel, or you could join us in the trade room at thesantorelliexchange.com and check it out tomorrow. So as far as that goes, guys, we also talked in the trade room today about doing a trade challenge. So we're going to set that up. One of the members actually found a great website where new traders could open up a virtual account, and they could mimic the trades that is on a I'm not sure exactly how it works. One of the members talked about it, so I'm going to look into that tonight and see what we can do with that. But we're going to do some type of trade challenge here, starting with a small account, maybe a $2,500 account. I'm going to show you guys how to grow that. So we'll do that. We just have to find out the details of that, and I'll let you guys know about that. If you guys have any questions, just comment down below. And please like and subscribe to our YouTube channel. You'll see daily content there. And like I said, guys, these markets, you know, this is the norm right now. You know, for the past week, we've been seeing an increase in implied volatility. We're seeing large candles, large moves here on a daily basis. Like I said, you can see these candles, how much larger they are than they typically are. That's showing us that these ranges are going to be a bit larger. You know, it's normal to see a 300-point drop or a 400-point incline increase on the Dow in the past week here. As you can see, 1, 2, 3, 4, 5, 7, 8, 9. For the past 11 trading days, you've been seeing some pretty large candles here. So I expect that to continue until after Q3 earnings season is done, and we'll see how the markets are for the holiday season. As far as the holiday season goes, the cyclical trends we've been talking about, Walmart, Costco, like I said, just reached our target today. It was nearing 231. Our target was 229 to 233. It blew through that target, so that trade made us almost an 80% gain already, and we're still holding on to that. And like I said, we took our loss on our Qs. We followed our trade plan and took our small loss on that as soon as it hit our loss, or as soon as it hit our stop loss. So it's important to follow your strategy, follow your plan, and be disciplined enough to know when to take your profit or to cut your losing trades. So that's what we did today, guys. And like I said, if you guys have any questions, feel free to ask, and I'll see you in the trade room tomorrow. Good night, guys. Have a great night. And if you'd like to sign up for our service, you could join below. Just use promo code CHART or promo code TRADE and sign up. Or promo code Brazil if you want to sign up for a year and save some money on a yearly membership. Take care, guys. Have a great night. God bless. I'll see you tomorrow, and we'll see if we can do some day trades. Good night, guys. Bye-bye.